Yes, hello and welcome to TMR Shorts. Today I want to talk about an investment opportunity. The reason why I decided to talk about this investment opportunity is right now the markets are crashing. The prices of most of the stock markets have fallen down. I mean, some stocks have given more than 50% or above fall. So there is a panic among investors like should they be invested or not. So today I want to talk about an investment opportunity which should be considered to be a safe opportunity as of now. So what is that? That is nothing but gold. So gold is something which we want you to think about, like what could be the various aspects. So I'll present to you my analysis on gold. What are the various aspects that you can take into consideration? So first of all, the current situation that is happening in the world as of now, like there is a trade war which is happening, lira crash. You just have witnessed the lira crash. We just had a video on NBFC crisis, the INFS crisis, which are there. Emerging markets, most of their currencies are depreciating. Their stock markets are falling. Emerging markets. Argentina crisis has come across. Brazil, there's an election, so there is a big volatility over there. And South African currency crash as well. So all these situations where prices of major stock markets or at least emerging stock markets are falling down, there is a widespread, there's loss of confidence among investors. So we thought, why not talk about an investment opportunity which will lead to, if there is people are always looking for a safer haven during this crisis situation, and nothing safer as an option than gold. So to start my analysis, first of all, I'll tell you how exactly is gold pricing mechanism works. So this exactly is the pricing mechanism of Indian markets of gold. So this is US spot price, that is 1186.84 as of now. If you see, their unit is in troy ounce. Our unit is in 10 grams. So first of all, we have to convert this into 10 grams. This is how you convert that into 10 grams. Okay. Then this is what you will get once you convert that in 10 grams. Our current rupee or USD INR rate is currently hovering around 74.34. So you have to multiply this amount with this. So you'll get a conversion into Indian rupee. And lastly, Indian government charges in 10% import duty on gold. So you add that, and this is what you get, that 31,200 or roundabout. That is the value that we'll get. And if you check this value, our current gold prices will be hovering around these values. So that is what you can do. The most two important aspects in this is that our gold prices are majorly, one is like the US COMEX prices, and the next is dollar prices. These are the major two factors that affect the prices of gold. Next, I want to give you is a derivative study. How does open interest impact the prices of gold as well? So I'm giving you MCX open interest, that is our Indian market, and COMEX open interest study as well. So let's open that Excel. So this is MCX open interest. If you see, this is from 2012 till date. So I have taken one trending market and one consolidated market to understand what has been the situation. If you see during the trending market, open interest, which was highest over here, okay, and that is clear indication that the trend was strong. Open interest tells you the strength of a trend. Okay, if there is more open interest participating in a trend, that means the trend is pretty strong, and you will get to know if the trend is weakening, and sooner or later there might be a trend reversal based on open interest. So something which you can look for. This is a very important level, 14,500 on open interest level. I have marked that as a green line. The price after this trending zone, the price went above this, but it was not able to sustain above this. I believe it's an important. If the open interest sustains above this, then we'll see a strong trend in gold. So this is a cumulative open interest that I've taken, and if you see that above 14,500, then definitely you see a stronger trend in gold. So that is one. We'll also discuss about international open interest. So this is international open interest. Again, this is COMEX. So you see in this open interest, there are three major swings or strong zones that you can see, right? These are the three major strong zones that you can see. Simultaneously, if you see, open interest has also made a top. Gold prices have also made a top. This is COMEX gold prices. They have made a top during that surge in open interest as well. And one thing peculiar is you see that open interest leaves the trend early. So if you see over here, from this zone, the open interest started falling and still the prices were going up, but we got to know that the trend in gold is weakening from this level itself. If you see over here also, the open interest started falling pretty early and then there was a fall in the price. So this clearly indicates, now at current, if you see the open interest is hovering around 4,60,000, that is also at a lower end of the spectrum. So from here, if you see a bounce in the open interest, again we see a strong trend being built up on these fronts. So that is one study that I want to present to you. The next is the correlation with the dollar index. Now if you see, gold is considered to be one of the safest investments in terms of crisis, and dollar is considered to be one of the strongest currencies. So these two into consideration, there has to be some correlation. So let's study that dollar index. So if you look at over here, this is the gold prices and this is dollar index. Okay, you can clearly make out that there is a negative correlation between dollar index and gold prices. You see this big surge in dollar index and simultaneously there was a fall in gold prices. Just see the last trend as well, big fall in gold prices and upward movement in dollar index. So there is a negative correlation between dollar index and gold prices, so which we can understand. Right now, if you talk about Federal Reserve or dollar, they are into a monetary tightening policy, and because of that, the dollar is getting stronger. Okay, it has already risen quite, like if you see over here, there is quite a big rally that is there in the dollar. Right now it is hovering around 93 to 94, if I'm right. I don't see like dollar getting much stronger. What they are interested target is 3%, and the market has pretty much discounted that. So I don't see a dollar getting much stronger from here, which means it's a good sign to buy gold. So that is also something which you can, as soon as you see dollar index or dollar index falling, you should be triggered that, okay boss, now the gold prices might start surging. So that is also one thing that you can look forward to. The next analysis is, so this is something which is very interesting. This is the study that I have done over the years in gold markets. I call it as a sentiment indicator analysis. What I mean by sentiment indicator or ghabrahat indicator in Hindi. So what is a ghabrahat indicator? VIX. So we'll study that and I'll tell you an interesting point what happens to gold at that point of time. So this is the VIX chart. This is CBOE VIX, COMEX VIX, that is we call US VIX. So VIX is nothing but volatility index. It tells you when is there going to be a huge volatility or if there is a huge volatility in the market as of now or not. Volatility means there is panic. People are a little scared about investing in the market. That is why you see in 2008 you see such a big surge in volatility index, because there was a widespread panic. So observe these rallies. So this was one rally in 7/7. This surge. So as soon as you see VIX trading out of a range, so this was the biggest out of that. So this also one of the biggest. This also one of that, like trading out of this range. Again, if you see, this was a range, it was trading out of that range. Finally, if you see over here, this was the range and it traded out of this range. As soon as you see a spike in this VIX, see what happens to gold prices. So those surges which I talked about, I have marked them with these arrows over here. You can clearly see the gold price and there is a huge volatility in the upside whenever you see a spike in that volatility index chart. So this was little early, but then there was a rally. This was also there. Even quite recently, if you see, this was the time when you got the surge and then there was a rally. This was the time and then there was a rally. There was a small rally over here, but still a rally was there. So sentiment indicator, another key parameter which you can look forward to while investing in gold. So I'll give you technical outlook at the end of this session or this video. Technical outlook. What I want to further talk about is, like we discussed about this is also very interesting case. So in 2008 we were in crisis. So all major central banks, they were in quantitative easing. They were pumping in a lot of money, and because of that the assets of these major central banks have increased. So if you see over here, as of now, if you see Federal Reserve, ECB, that is European Central Bank, and Bank of Japan, the total assets was about 14.4 trillion. Okay, this is huge in their total asset as on today, that is September. And if they have such a big asset, and if we happen to have another crisis, they would not be in a situation to bail out like last time they did with quantitative easing or pumping in money, because they've already pumped in so much money in the market or in the economy that they would not be in a situation to pump in further. So what they will do is they will probably go to gold, and that is another thing that I want to show you, gold. So these are top 40 countries with their gold reserves. Okay, and this is in terms of their total reserve, how much is gold reserve. So United States has the highest amount of gold reserve, that is 88,133 tons. That is 75% of their reserves. But if you see Germany and like if India, we just bought recently 8%, like not 8 tons of gold. That is also there. So it is 5% of our total reserve is gold reserve. I'll give you the stats as well, like who are buying golds of late. So these are government will look forward to these reserves when there is going to be a crisis that is going to happen next. I'll also tell you the recent trend. So this is a recent trend from 2000 till date. What is the recent trend? Which major countries or central banks are buying gold? So you can clearly see China is pretty aggressive in buying gold. Same is you can see with Russian Federation, this purple line, it is from 2006 onwards they have been intent on buying gold, and that is you can clearly see we bought gold over here in 2009 onwards from IMF, and there is a small bump of 8 tons, not huge, but there is a small bump. What I want to talk about is Turkey, lira crashed, right? But their central bank started accumulating gold. So you can clearly see in 2010 onwards. So this is something which you should look forward to, that they have started buying gold. So they are trying to create some kind of reserves in gold as well. So that is also should be one of the characters that you should look forward to before buying gold. The last thing that I want to talk about before the technical analysis view I give to you, this is the AUM of gold since 2003. This is the chart that will show you AUM of ETFs or all the major funds that are there that having gold in terms of so what happens in an ETF, if you buy one ETF or one contract of gold ETF, similar amount of gold should be kept by that fund. So that is how it works out, and this is the amount of gold that is there under AUM. So if you see in 2016 there was the price had increased in gold, and similarly AUM also, this is the price, this is gold price chart, and AUM also there was a significant bump in gold AUM, but the AUM have not come down with the fall in price. It is still at up, it is not at 2016 levels. So which tells you clearly that these funds are buying gold. So they are buying gold, and that is clearly an indicative under these AUM. So they are taking their positions in gold. That is one aspect. And lastly I want to talk about is technical point. So I'll show you Indian MCX chart of gold. This is a weekly chart. If you see of gold, that is in Indian terms, that is 31,200. We discussed at the starting it will be around 31,200. So this is 31,200. And if you see, this is a complex diamond pattern formation which is there in gold, which indicates that after a big rally, if you have this pattern, that means a clear consolidation. The prices are not able to decide which end they are going. But if you see a breakout from this pattern, we can see a similar rally in gold again. So watch out for this particular pattern as well, because that is also another indication that gold could be the next investment opportunity. Thank you. I hope you like these videos. We will come up with these more short videos for you. Please let us know in the comment section that what do you think about this video. Thank you so much, and let's see you in the next video. Thank you. Take care. Bye.